Hi, I'm Juliette Ferguson. People call me Jette for short. I'm with Sotheby's International Realty in Carmel, California, and I'm interviewing Jeff McMullen today. He's a senior loan officer with Cal Financial. He's successfully obtained or completed loans for many of our clients.
Yep.
And today we're just going to talk about some of the basics, like what is a mortgage, what is a loan, what is the difference between an FHA loan, a conventional loan.
Mm-hmm.
Last time we talked more on the VA loan line, so let's go along the more standard.
Okay, so FHA loan is a loan made by the Federal Housing Administration. It's basically, it was designed for people who didn't have a whole lot of money for a down payment, but could afford to make payments. And so the government requires on those loans 3.5% of the purchase price. And so you don't have to save the traditional 10 or 20%. The benefits are typically the rates are a little bit better. Say a normal FHA rate today would be maybe 4.7, 4.875, whereas a conventional might be like 4.875 to 5%, right? So you get the benefit of a lower rate. The offset to that is that you pay mortgage insurance typically with FHA. PMI, right? So mortgage insurance stays on the property. But for a lot of people, it doesn't matter because it means that they get into the house. A lot of times people will buy an FHA loan and then will refinance in 2 to 3 to 5 years down the road.
Is it pretty typical to refinance in that time anyway?
Almost always. It used to be not as typical because the FHA mortgage insurance would eventually go away, and that doesn't happen anymore.
That's what I understand as well. So they
There
pretty
are
much
some
have
cases
to,
where
if
it
they,
does,
even if
yeah.
they pay down 20%, if they have
Correct.
more than 20% equity in their house with an FHA, they still have to refi to get rid of the PMI.
Yep, there are some cases if they put money down initially,
Okay.
that it will go away, but it's like 11 years, so it doesn't go away very quickly.
Right. So, but are they often in a better scenario if they start with an FHA loan and then go over? I know you can't give advice on that, but a lot of people would be better off with an FHA if they don't have the money down at first and then switch over.
Well,
to
yeah, what
conventional.
we've seen is a lot of people who buy FHA or who have bought FHA in the past, they paid down their mortgage and then their house appreciated.
Sure.
And so because of all that appreciation, they're in a much better spot than had they waited.
Right.
Because now they would have to put down that much more money because the houses are costing that much more money to get the same house now, right? So buying initially and just getting in and taking advantage of the appreciation of real estate over time, I think is always a pretty good option.
Over time. Very good word. Because traditionally, over time, we do well in California.
Yes.
But if you have to move away and sell at a certain time, it might not be the optimal time to sell.
Yeah, absolutely true.
So we haven't seen that in a while, but
yeah, I mean historically we do see trends of 10 years, 12 years. We don't know when values are going to go down or even if they're not. I think you probably know this better than
we're
I.
seeing it going up still right now in most of the areas that we do. But Pacific Grove has been down 10% and 9% for May and April from the past year before. So that's interesting. That's just the average sales price.
Yeah.
Has gone down, but Pebble Beach is up, Seaside's up, Marina's way up.
Pacific Grove can have kind of violent swings because if like one of the $2 or $3 million property sells in Pacific Grove, then all of a sudden it's up. Right?
Exactly.
Got it.
Exactly.
Okay.
So
that we do a lot. So FHA doesn't work everywhere. There are loan limits, right? So for an FHA loan, it's typically in Monterey County, it's $615,000 versus in other counties it's more, and in some counties it's less. We're considered
a lot less in some counties.
We're considered a high cost area here, and so we can do that. But if you need a loan for more than that, then you have to look at doing different loan programs, and then you're going to have to start talking about 10% down, 20% down in some cases. In some cases we can still find ways to do it for 5% down. So
what about FHA loans where they have 5 or 10% down anyway? You could go at a higher price point than the...
Right, so then you can do what's called a conventional loan, right? So we've got multiple scenarios where we can set you up with a 5% down mortgage where we have a 80-10-10 program where you can do a first loan and then a second loan, which would allow you to get less of a down payment. And so we do have low down payment programs. We specialize mostly in purchase money. I don't do a whole lot of refinancing. Most of the loans I do are for people buying their homes.
Sure.
So, yeah, there are, I guess, if you're looking for a low down payment, if you're looking to put as little money as possible, we've got different programs for that.
5% down kind of thing.
Yeah,
Of course, the payments are higher.
correct, because you're
Sure.
borrowing more money,
Right,
right?
right.
So yes, they are higher. It's just, I think a lot of people are under the impression that since they don't have 20% down, they're locked out of the housing market, and that is not
Right,
at all
and
the
they're
case.
not. I mean, I'm seeing a
Mhm.
lot come in at 5%, 8%, 10%,
Mhm.
different numbers. So
Yeah, and we can do, I mean, we do 10% down all the way up to like 2 million, so.
that's amazing.
Yeah, but it's something that's not typically available in kind of like your bigger commercial banks. I worked at a big commercial bank for a decade, and
Right.
we just didn't. There were things that we didn't know existed, right? And so
Right.
if you're going through the normal communication, and you're going through, like, I walked into my bank, they said I couldn't do it, so I can't buy the house. I would encourage you to talk to a mortgage banker or a broker.
Right,
Mhm.
right. So I think it's good. If you have a bank, go talk to your bank, but also talk to a mortgage broker or two and see who's going to be best. And then when you pick somebody, stick to them.
Yeah, the thing I love is when I was at a bank, we had to know what this bank did and what the bank didn't do, right?
Mhm.
Whereas every bank's got a niche. Every bank has a different
Right.
way of kind of trying to sell to their clients, right? And they have different things that they think are more risky or less risky, and their risk tolerance will determine kind of what they're willing to let you do as far as buy.
Versus you're working with 100 or more banks.
Right,
And
so if-
you have varying risk tolerances that you
Absolutely.
could
So if
put
Wells
people
Fargo won't do it, but Chase will, that's fine. We'll go to Chase. If Chase
Right.
won't do it, I always tell people that we work with probably all of the banks that you've heard of and about
Oh,
10
yeah.
you've never heard of.
Oh, yeah.
Right?
For sure. Okay. Well, good. What about, let's say, I have a lot of medical clients all of a sudden.
Mhm.
So let's say we've got doctors, dentists, they're making great money,
Okay.
but they don't have a whole bunch of extra, money to put down,
Yep.
but they have, successful years of business.
Yeah.
What can you do for them?
They're interesting. So it's a class of borrower that banks like to lend to, right? And so that there have been some programs developed for what we call doctor loans, or typically it's doctor loans. So usually if you're a medical professional, they'll make exceptions that we wouldn't normally make, meaning for most clients they want to see that you've had a 2-year history of working in a field, whereas with a doctor sometimes they're willing to kind of let that number go, and they're willing to, it's basically based on I think the perception and also the reality, and they've got statistics to back this up, that doctors eventually make a whole lot more money than
Right,
most,
right.
right? And so since they have that ability to have increased income down the road, the banks are willing to take a risk on them now and
Right.
hopefully capture that business.
Makes sense.
Yeah, it's somebody they want to take care of because they want that person forever.
Yeah. I had is it a neurosurgeon, the head?
Mhm,
I had a neurosurgeon recently by a beach house, and he was in one of those type situations and
Yeah.
was not a problem getting a loan.
Yep.
So-
And a lot of times they can do low down payments. They don't necessarily have to have as many reserves. A lot of times when you're doing jumbo loans, so bigger transactions, they ask for a lot of reserves, meaning money after the close. The bank doesn't want you to spend your last dollar. They want you to have 12 to 24 months worth of payments set aside, so
Sure.
that should something happen, you can bridge that gap until you get a new job.
Right. Okay. So tell everybody your phone number.
Oh, my phone number is 831-210-4034.
Ooh, that's your cell phone.
That is.
I love that. I have a pet peeve about cell phones with people that I work with. I have to have their cell phone. So say your cell phone again.
It's 831-210-4034.
And this is Jeff McMullen, Cal, K-A-L, Financial. He's located at Clock Tower over between the Crossroads and the Barnyard in Carmel, right around the corner from our office. So this is Jette TV, Juliette, Jette Ferguson signing off. Thank you.
Thank you.